what's the status of early stage investing and company incubators in each of your geographic areas? And so what are your thoughts on the near term?
So I'll give you a little perspective on the East Coast. Last year, we graduated 12 companies from our accelerator. They raised cumulative $5 million in about 4 months from graduating. Some of that was raised prior, so that was really great, and it got us in a ranking of a top 10 also as an accelerator. This year, we had 5 companies trying to raise about 2.5. They just graduated about a month and a half ago, and they're still raising money. I think they'll eclipse that amount. They'll get over it. But I think they're having a harder time this year, which is crazy. Last year, we took idea stage companies. This year, they all had revenue coming in or had revenue coming out. So investors are holding close, maybe more so than they were last year. That's what I'm seeing.
Yeah, I think on my end, we started our program about 3 weeks ago, so we're about to hit demo day come October. And what's interesting is we have seen, from 2010 to 2012, it has been a huge upswing. For us, every year we've had the companies raise more. So we're really curious to see, because every year we hear in about summer, we start feeling this kind of, this year might be the crunch. It might have finally started coming as people get a little bit tighter. But with that said, the Midwest has been really lucky that, with Exact Target and Angie's List IPO, that there's a lot of capital being unlocked that actually wasn't there from the early stage, because we've been struggling to educate on what angel investment means in the Midwest. And I think we're finally coming out of that, where we've got some real people getting involved as angels that's different than the VC available.
Yeah, I guess I would add to that I think there's a level of geographic specificity to how you answer that question. So I make my home in 2 different cities, Conway, Arkansas, and Indianapolis. And yes, it is every bit as glamorous as it sounds. If you look at Arkansas, for example, where Gravity Ventures also operates, we've been on a tear, and the startups in that state have been on a tear, because there is essentially no competition on the funding side of the ball, but there's a lot of competition for those dollars in terms of the startups. And you all have heard the deal about being able to launch a company anywhere and economics changing and blah, blah, blah. So if you look at, there are certain geographies where there is not parity between supply and demand in terms of capital and founders. And it's interesting because I feel like it's a best kept secret that only guys in the Midwest and the Southeast kind of understand. And if you talk to folks, I talked to a partner at Google Ventures a year ago, and I said, why don't you guys more actively invest at the early stage or across the rest of the country? And he said, well, we're numbers guys, if you can believe that. And he said, we've done the math, and most of the best opportunities are within 200 miles of our campus. And it struck me as if an oil man in the 40s saying, well, we're only going to dig wells in West Texas because the data shows that's where all the good wells are. When in reality, no one had tried to poke a hole in the oil sands of Canada or in the Fayetteville Shale or any of these other places. So there continues to be this kind of myopic view of where the opportunity is, even though most folks on the coast will pay lip service to the fact that good ideas originate from anywhere. The actual money, the boots on the ground money, in these kind of second-tier cities, there's a huge arbitrage event. And we've seen it to some extent in Indy, and Indy is reaching a scale now where that's beginning to even out. But in other markets, like central and northwest Arkansas, we still see huge opportunities as a result of that disparity.
Yeah, our investment thesis on that note is all about underserved markets. So I was in Nashville 3 weeks ago, Kansas City yesterday, traveling to Ohio in a couple weeks. Like the Carolinas, incredible accelerators, incredible opportunities, no investment dollars. Literally, there are angel groups just sprouting up now. And so we do feel pretty privileged, actually, to have the opportunity to find great companies in markets like this. And if you're an entrepreneur, you're always going to complain that there's not enough money. But if you're an entrepreneur with traction, you'd be amazed at where the money will come from. And that's kind of just a fact, I think, in every market. We do stay out of the valley, though, because just too competitive, and
it's come to Arkansas. And Indianapolis.
Well, tell me about a deal in Arkansas. We've done deals together before. We'll do another.
I mean, our single largest exit to date, was just a couple of rednecks in Northwest Arkansas, and it is. And once again, you talk about underserved markets. There's this perfect intersection of an underserved market that has a huge untapped reservoir of capital too. So if you look at, and I know we're not talking about Arkansas up here, but you look at that dynamic, and I know you're familiar with it, right? So Northwest Arkansas has this disproportionate amount of wealth, right? Walmart, J.B. Hunt, Tyson Chicken, blah, blah, blah. And there's a number of places like that. I mean, RidePost is one of your companies at the Fort, if I understand that correctly. In that region of the Southeast and South Carolina, there's a very similar dynamic there that's really fascinating.
Oh, it's off. No, we're good. I would just, zooming out a little bit, access to seed capital in the Midwest when did you guys start? When was your first investment?
2010.
2010, 2011, we're 2011, 2008. So like none of these funds would have been on this panel in 2007. So the fact that there's like the landscape for seed capital in the Midwest has totally changed. It's kind of hard to say how it compares 2012 to 2011, but there's no question that it's a good time to be an early stage entrepreneur in the Midwest compared to 3-4 years ago is completely different.